AMC stock is going crazy today, up 17.90%, hovering around 18% at the time of recording this video. Most certainly a very bullish day, hitting a high of $27.50 per share on unusually large volume. Now, what's going on is what you guys already know. This is about the ape share. This is about hedge funds don't want their synthetic shares to be exposed. Maybe it's brokers, maybe it's brokerages, maybe it's everyone. They don't want that to be exposed because bottom line, if only legal shares get the ape share, only legal, I should say, AMC shares get the ape share, well, that's a big problem if there is many times the float still outstanding that should not be. So what would in theory happen is hedge funds, brokers, brokerages, whoever let out these synthetic shares would go out and buy real shares of AMC so they don't have their synthetics exposed, because that's going to be a big problem if that were to be exposed. So that's kind of the easiest way to put all of this, and that's really what is going on today over the past couple of days since earnings came out on last Thursday. Now today you are seeing, like I said, unusually large volume and just buying pressure in general. I mean, right from the open today you were up about 6, 7, 8% in pre-market, bobbing in that range, but still heavy pre-market volume. And then AMC just started to rip right off the gate from 21.83 in pre-market was the low for a brief period, hovering around $23 per share. And then you went all the way to 27.50 within like a 15-minute time frame. Now, we are on a more sustainable, slow and steady course. It looks like maybe some options hedging happened in the beginning of trading today to really boost us up to these levels. Maybe a short did cover. Something happened right here. It's probably the option activity, if I were to guess, that was being hedged out from last week. Because if your options expire Friday, well, technically brokers, they don't have to give you your shares still for that T+2 settlement time. So that was probably a lot of that option hedging, if I were to imagine myself. Now, what you're seeing now is that AMC stock is pretty much floating just above the 50-day moving average, which is a sign of a healthy uptrend. So continuing at this pace, I mean, if we get more momentum from here, which it looks like we are getting, you could close up in the 30-40% positive range. You could close over $30 per share. Now, $30 per share, 25, that was really roughly my price target for the end of this week. So we're definitely getting there a lot faster than I would have initially expected. And today and tomorrow are really going to be the days where AMC can probably move around a lot more freely, because coming on Wednesday you have CPI that comes out, and that is going to be a big problem for markets potentially. If CPI comes in too high, well, that's not going to be good. That is going to solidify further rate hikes, and that will help to bring down future valuations of the companies that we invest in, especially if the economy does not go into a recession and it takes a while. Well, that means that interest rates are going to have to go up, because the only reason the 10-year treasury has been falling when in theory it should be rising as the Fed is raising rates is because essentially people think a recession is coming, right? If a recession comes, deflation comes, and investors price that in beforehand. Now, you are getting some breaking news that consumer expectations of future inflation decreased significantly in win for the Federal Reserve. A New York Fed survey showed that respondents in July expected inflation to run at a 6.2% pace over the next year and a 3.2% rate for the next 3 years. That marks a big drop off from the respective 6.8% and 3.6% results from the June survey. Expectations for food increases fell at the fastest rate in survey history and the second fastest for gasoline prices. Now, I don't know who does these surveys. I have never been surveyed, and I really doubt people that know anything about inflation are really going to say 3.6% over the next couple of years, or 3.2%. I think we probably will get down close to that, but probably not all the way to those levels unless we get a recession. And I think what's more important is people's expectations for the actual economy. What do they see as far as their job security? Are people worried about losing their jobs? You know, what's the conversation like in the office or in the warehouse? I think that is more indicative of potentially a recession, which a recession is really the only thing that is really going to help get inflation under control. And that is why you have seen the bond yields falling. That is why you have seen the price of oil and other commodities that have been falling over the past month. It's not because people, you know, are just not expecting inflation. People are just, slashing prices on purpose. It's because they expect a recession. So these commodities tend to get ahead of any recession or potential deflation that could come. Now, I think actually a small recession might actually be a positive thing for the markets to get inflation down, believe that or not. Now, what we're seeing with AMC stock, take a look at some of this option activity, guys. You have an August 12th, $22 call for $123,000, a September 2nd, $27 call for $122,000, a January 20th, 2023, get this, 140 call for $625,000. This is a large hedge fund that is making this trade. They bought 5,000 contracts and paid an average of $1.25 or $125 per contract. And that's not a high quality option. That's a very low quality option. Relatively speaking, AMC would have to like 5x in price to get that option to go in the money, to essentially have that option actually have intrinsic value. Well, there's only 4.5 months left on this option, so you really need to see a very big move over the course of the next, call it 2 months, or that option is going to expire worthless. And when you're a hedge fund and you can afford to make $625,000 single orders on AMC, why would you not go with something that is a higher quality trade? You absolutely 100% would. So I think that's very indicative of potentially seeing a big rally to the upside. It really goes to show a lot how hedge funds are really feeling about AMC over the next coming weeks and months. So actually right now AMC is popping a lot more, guys, getting very exciting out there, almost up 21%. But as far as other option activity, you do have a $33.50 call for August 12th. A lot of these $30 call for August 12th, $22.50 put for August 12th. Some puts coming through, but they're very small, and they're probably hedges to these massive call positions. You know, $70 call, $70 call for January 20th, 2023. Those look to be very active options. The January 20th, 2023. Even you guys can see right here, January 19th, 2024, $90 call. It looks like these hedge funds are really starting to price in some degree of FOMO over this week and over the next coming couple of weeks. So you're seeing a lot of options, guys. Pretty much as soon as the bell rang this morning to start trading, people started to flood into these call options, and you got some big orders. 1750 August 12th, $410,000 options trade. A September 16th, $20 call worth $400,000. Multiple, almost all of these orders are in the $100,000 plus range. So what we're seeing is very encouraging. And even for the day so far, 90 orders totaling $9.82 million. Positive order value of 81%. 90 orders, and you're not even 2 hours fully into the trading day. Well, probably about 3 hours by the time you guys see this video. That's a lot. That's a lot. And these are some low quality options. Like I said, relatively speaking, if hedge funds have tens of millions or billions of dollars, why would they buy a low quality option? Well, it's because they have a lot of conviction in the fact that AMC might 5 or 10x in value. And that's the difference between, you know, making a 10,000% return on your $600,000 or making a 100% return on your $600,000, right? Lower quality options, have bigger payouts. Higher quality options have smaller payouts, but they're higher quality. They're more likely to actually pay you out. So these hedge funds, they're definitely going with some risky trades here and definitely risking it for the biscuit with some of those orders. Now, as far as AMC and the short interest, the dollar amount of short positions is $2.14 billion. This has went up 7 days ago 46.2%. 7 days ago, we only had short positions worth $1.46 billion. But get this, the estimated short interest is down from 19.49% 7 days ago, now down to 18.71%. So what is actually going on here? Well, I think it's very clear to see that there is a disconnect between what is being reported to Ortex. And I do think there's probably a decent amount of shorts that are coming in and stepping in right now, especially as AMC is above $25 per share, to take this opportunity to short AMC back down and try to force this thing back into the ground ahead of the CPI report, which comes out Wednesday at 8:30 in the morning. So finalize any trades you guys are going to make coming tomorrow for CPI, because that's going to be the most important thing. But nonetheless, short interest of free float sitting at 18.71%, free float out on loan 25.57%, shares out on loan 131.77 million. You do see days to cover sitting at about 3, cost borrow max at 14.39%, cost borrow average at 9.15%, and cost borrow minimum at 7.26%. Now on Friday, the cost borrow max was sitting just under 10%, and now it's at 14.39%. So I think that is pretty indicative of, the holders of AMC want to get paid out more to lend out their shares, which makes a whole lot of sense. Now the yield curve is still inverted 43 basis points, which is massive, and the probability for a 75 basis point rate hike did go up 6% today. On Friday, you had a 52% chance of a 75 basis point rate hike. Now you have a 58% chance of a 75 basis point rate hike. And I think the markets are not freaking out all too much, just because of how much time there is until that September 21st meeting. You haven't even got the first CPI report, which comes out on Wednesday, like I said, and you still have another one which comes out September 11th, I do believe, if not September 12th. I'll get you guys that information here in the next video. But nonetheless, as far as the option activity that we are seeing for the day, the option chain in general has really started to just become massive yet again. You have about 86,000 calls that are currently in the money and about 40,000 calls that are out of the money for this week. And a lot of these are going to be close to the money. They're going to be cheaper options and potentially have lower break evens. And you could see a lot more hedging out from the market makers. So that's that. As far as the actual technical picture here, as you guys know, it's been pretty explosive throughout basically the whole entire day, but you're on the slow and steady uptrend. Now, we're not even to where we were, back here in March. That would be about $34.33 per share. I see no reason why AMC could not continue at least to those levels, if not higher than that. That's going to be a level of resistance that we will see, just like we seen back here. AMC pretty much got shorted into the ground. Like, it was pretty bad what happened on this day. That was March 29th. You gapped up in the beginning of trading, then pretty much sold off throughout the rest of the day. I see no reason why AMC couldn't make its way back to $30 to $50 per share by even the end of this week, probably. I think that's possible. After all, if you had a 100% gaining day from here, that would put you back in the $50 range. So I think that is most certainly possible, and that's really what I would target, is around $52 for some large upside, and that would be the high that we did see back here in September of 2021. I think it's more probable than not to see another, couple days potentially of a rally, if not another at least 100 to 300% positive day. Possibly this week, possibly next week, or the week after that. Who knows? Your guess is as good as mine. But what we can see for the day so far, keep in mind you're only a couple hours into trading, and you do have about 77.8 million shares that have traded hands, so it's been very good. As far as moving averages, levels of resistance, support, you're in kind of no man's land. I've had $24 drawn out for a while here, where you really started to sell off last time around and where you gapped up last time around. The 100-day moving average was around that level as well, and that's pretty much where we opened today, around $24, gapped up to $27.50 so far. We'll see where it goes by the end of the day, but you're in between about that 200-day moving average level of support around $21 per share, and the level of resistance, which will be around $30 per share. So that is pretty much going to be all for this video. That's really what you guys need to know. Hit that like button and subscribe to the channel if you guys want to come trade with me live in real time. Link down below in the description. I do have trades on AMC expiring in September, and those suckers are up about 400%. So if you guys want to be a part of the AMC trades or any other trade that is made, link down below in the description to sign up for that one. You guys enjoy the rest of your day, and I will see you in the next one.